Good afternoon. It is Wednesday, January 9th, 3 p.m. My name is Stockdarts, and in today's video I wanted to go ahead and take a look at the markets. Typically on a Wednesday we have our Wednesday webinar where I review the markets in great detail from 12:30 to 1:30. Unfortunately I wasn't able to do that today, but now that I'm back in the office I thought I'd go ahead and give you guys my thoughts on this as we start to approach the market close. Last Wednesday we were looking at the markets and we expected a bounce, right? We expected the markets to move higher, but we didn't think that there was really a good opportunity to go long. The risk reward setups just weren't really there, right? We didn't have good risk reward. The probability plays that we were we like to look for high probability plays. Those weren't really setting up well. So despite the fact that we were looking for a bounce, I wasn't too excited about looking for too many long plays. I think that at the moment we're still best served in playing defensively with the environment that we're in right now, right? And so my idea was, let's wait to see this bounce. Let's see how we behave as we start to approach critical resistance levels. And if we start to stall out and start to sell off again, then maybe we get into a spot where we can get some good short trades going. And that's kind of where we stand right now, although as you guys will see as we move through the four major market indices, we're in a little bit of a different spot in all of them. And even on the S&P 500, if we look at it, depending on how you want to judge your trend lines and where you want to consider your support and resistance, we actually could be just below resistance or just above resistance, depending on your definition of it, right? So there's a lot to get into and a lot to really try to analyze out of what's going on with the markets. Now, the one thing I do want to point out before we go ahead and get into any great detail on how we want to go ahead and trade directionally over the next few weeks, I do want to point out next week really is the beginning of earnings season for the first quarter of 2019, and that's going to have probably a pretty big impact on the overall markets. We've already had a couple of scares and a couple of shakeouts in the market with companies such as Apple threatening or warning that they are going to have lower than expected results, right? And so there could be a little bit more coming in the next few weeks as some companies start to report their earnings, and particularly how they issue their guidance into the future, right? So earnings is typically a volatile time when you're trading, and it's important for you to keep track of what names you're trading and whether you're going to try to trade through a report or not. As for me, typically during earnings season, I tend to lay off of a lot of directional trades, and I focus more on trading options for specific earnings events. I've had a lot of workshops in the past that have worked out really well for traders, and what I'm going to do this quarter is an extension of what I did last time, which is start to offer those trades through my patreon.com page. And for those of you that aren't aware, the link will be below in the description, but it's patreon.com/stockdarts, in which I now have a subscription tier for options plays, and most of my earnings plays will be put into that subscription. And what I tend to do in this case is play the volatility on the options rather than try to guess a direction on earnings, which is kind of a 50-50 gamble. But I found the volatility tends to behave a little bit more easily to be able to predict. And we've done really well with it over the last 5 or 6 years. So in general, I'm not looking that much to trade the market right now from a directional perspective as individual names or the market indices or anything of that nature. However, I do want to go ahead and try to analyze what type of environment we're in and what kind of plays will make sense for those that want to continue to trade that way. And as I said right now, from last week I was looking at this as being the opportune time to try to play a short trade, right? And the reason for that being, we spent basically all of 2018 forming a very nice base, and we have now broken down below it and run right back up towards the bottom of that base. And typically what tends to be considered strong support, once you break below it, that becomes strong resistance, right? So again, depending on how you judge this resistance zone or support zone, we could be just below it or just above it. Now, what I meant before about that is some people would say the meat of the price action is somewhere around 258 to 259, but others will say, well, we've got these wicks down here around 254 or 253, and if we judge it by that, well, then we're right back inside the base, right? And if that's the case, then we've had a pretty positive move in the S&P 500 and are actually trading back in the base that we formed last year. So the reality is, when we are looking at trend lines, they're not just one specific line that demarcates one penny of a certain price, right? A lot of times these tend to be resistance zones or areas of resistance, right? So in reality, what we're looking at here, if we really look at the meat of where the support came in, you could say it's something around something like this, right, where we had a lot of our support come in somewhere in the 256, 57 to about 259. And if that's the case, you can see today's price action is right smack in the middle of that, right? So I would say right now we are in the process of trying to push through this zone and get back into that base. I don't think technically we're in that base as far as the S&P 500 is concerned, but as you'll see as we move forward to the NASDAQ Composite and the Dow Jones, they have a little bit more clear resolution as to where they stand compared to last year's price action. So at the moment, I think short plays are still in play. And what I'm looking for now is confirmation of selling coming in this area. So what we'd like to see is in the next couple of days some big red candles and a reversal at this area, at which point you can go ahead and take some short plays like the one I outlined in my blog at patreon.com for some of my members. And I think that that's still the most viable directional play to take at the moment. Now again, that being said, I think that we've had some pretty positive strides in the market right now, and suspect that if we do sell off at this area, we're not going to come and return right back to lows. I think we're going to sort of come back maybe halfway or even a little bit less and sort of develop some price action just around the bottom of this base or just underneath or above, depending on which index we're looking at, as we try to establish what we want to do with 2018 and again, or 2019. I think a lot of that is going to be with the tone that we get coming out of earnings season. Now, if we take a look at the NASDAQ, you'll see that it's a little bit of a different picture. We are clearly in last year's base, right? If you take a look at it, the major areas of support on the Qs was this area around 154, and then a lot of the price action centered around the 156 area. We're well above that. We're right back into the middle of this channel that we were printing, that we were looking at last week as well. So overall, the Qs are in a much better spot and have clearly already moved back into that base, right? Which leads me to believe that even if the SPY trade, that SPY short setup works, it probably won't be that substantial of a move to the downside, because if we do reverse on the Qs, we're probably going to come right back down and retest 156 and this 154 area. And I think as long as the price action stays above there, it sort of hints that the market's not really ready to turn around and start crashing to new lows. I think at this point, we can probably say that at the moment, we're going to try to establish a sideways price action and have probably established a short-term bottom as we start to reach or move into earnings season. So for now, I think this is actually pretty positive development for anyone that's looking at this from a bullish slant, or anyone that is maybe worried about some of their holdings and worried that the market's going to continue to slice through support as it did throughout the close of 2018. I think for the moment, based off what I'm seeing on the Qs and what I'm seeing out of the Dow Jones, we could have reached the point where we found at least a temporary end to this sell-off and are now trying to at least trade sideways, right? So the question now is, can we hold these levels that we've cleared? Again, I think on the S&P 500 it's inconclusive, but on the NASDAQ it's quite clear that as long as we stay above 156 to 154, we have stopped the bleeding for now and are ready to sort of move sideways. Now, as you can see, there's a lot of overhead resistance. I don't think that we are going to continue rallying too much more than what we're seeing right now. I think we're getting close to an end for this temporary bounce that we've had, just judging by the candles and how they're getting smaller in size as we come up and we're getting more of these dojis. So I don't think that we're going to make our way back up to 166 to 168 yet, but I think ultimately once we consolidate, if we come back and retest 156 and then start to make our way back up, the top of this channel should be the clear resistance level, and we have a nice horizontal level around 167, which again I think it should be the ceiling for now. If we do have some positive moves coming into earnings season. Now, if we take a look at the Dow Jones, we can also see that we are pretty conclusively inside our base from last year, right? So despite the fact that we crashed and broke down, the nice rally that we've had the last few days has at least put us back into our previous base. So again, in a little bit of a contrast to the S&P 500, this one's a little bit more like the Qs in that we have cleared a lot of these critical zones, this 235, and even if someone wanted to be a little bit more stingy about it and say, well, all the real support candles are here around 237. We're above that too, right? So we're doing okay here. And very similar to the NASDAQ, I think the key now is when we do pull back from this, and again, you can see these long wicks and these dojis as we start to make our way upwards. We're starting to get these little shooting stars. This is probably getting close to an end for this recent bounce. The question is, when it ends, do we just sort of consolidate in this area around 240 to 235, or do we turn right back around and crash right through support? And I think that's going to be critical. So if you're worried about the market right now, I think you want to look at the Qs and you want to look at the Dow Jones, and you want to see how we respond to this level around 235 on the Dow Jones, and the level we pointed out a little earlier now on the Qs. And as long as we maintain those levels, we should be fine, and we should at least start to trade sideways. And then from there, we could make a nice sort of consolidation pattern that leads towards a more high probability setup to the long side, where we could trust our plays to the long side a little bit more than what we've done so far. Again, I think trying to play to the long side now is not really a good idea, because the momentum has already sort of started to wane. And I think if you're trying to get it now, you're just chasing the previous price action, and you're probably setting yourself for a failure on a trade based more off of timing than anything else, right? Typically, after you get these strong moves, you're going to need to consolidate and let some traders take profits before you can sort of set up for another move back to the long side. So I think for now, the long plays are still sort of off the table. I think depending on what you're looking at, what sector, what index, some short plays may be on the table, but a lot depends on how we navigate through these areas in the next few days. And then finally, we have IWM. And IWM, of course, is the weakest of the four. And as you can see, it's no matter how you want to interpret it, we're not really inside last year's base, right? You can say, well, we start to clear that wick, so maybe we are. But for the most part, the meat of the price action is really around 145. And we still have a ways to go to get there. We did get above the 20 period, which is very nice. We're starting to approach the 50 period moving average. And I think if you're looking at some short scenarios, your best bet is probably some small caps as they start to approach similar levels. And if we do get a pullback in the markets, we'll see it first on IWM. Again, I don't think that we should be that concerned with whether IWM fails at 145 or 146 right now. As long as the other indices stay above their respective levels, I think we're okay. But IWM is still showing that traders are worried about volatile assets, and they're still going to leave the small caps first, and they're going to actually struggle to come into the small caps the most also. Now, again, this is actually very nice positive price action. These last four candles have been really strong, and we've made our way up pretty strongly. Again, you don't want to chase this price action because we're due for a pullback soon. But overall, this has been a really nice positive turn of events. And despite the fact that I'm still looking at some shorts, I definitely have changed my opinion a little bit on the market. And I think that at this point, we are probably looking at a more neutral market where we can try to grind sideways and see what happens. Now, again, a lot of this could change because we have earnings again. We have banks reporting next week, and then we're going to have a lot of tech names reporting 2 to 3 weeks from now. And they will have a major impact on how we move forward into 2019. But as of now, it looks like we've at least set up a short-term bottom and are looking to try to force the issue with some of these resistance levels. And depending on how we navigate them, we can get a clear picture again as we move through earnings season as to what we want to do as we continue to move forward into 2019. Because again, we had a really ugly end to 2018, but it was for the most part a neutral year until the very end, right? And as a matter of fact, we were actually at new highs around August and September, just before we really started to really fall apart here. And I think the tone for this year has not been defined yet, despite most people thinking, well, it's just going to be a continuation of how we closed 2018. That might not necessarily be the case. Again, if we go back to, we're going to go to the S&P 500, and we go to a weekly chart, we had a very similar sort of situation around 2014 and 2015, where we had this really strong rally, and then we started to really fall apart, particularly in 2015, and it looked like it was basically the end of the road, right? But what we ended up doing was just trading sideways for 2 or 3 years, and just building a new base. And while this is not quite the mirror image of it, it's the same sort of idea where we are really just trying to build a base, and then from there, see where we move forward, right? And again, I'm not ready to say we're ready to resolve and start moving to new highs, but if we can at least make our way back into this range, we can maybe put this idea that we found a bottom for now and are trying to establish more of a sideways range as we head into 2019. Now, I still think there's a very real possibility that we continue to go down, but in the short term, I think that we've at least established the bottom for now, and we'll get more warning signals if we're ready to roll over again, depending on on how we move forward into the next couple of months. But I think for now, things are looking a little bit better than they did last week and the week before. Particularly when we look again, as I said, when we see what we're looking at on the Qs and on the Dow Jones, we have a couple indices that are at least back in that range, and I think that's a positive development. So, again, my closing thoughts are: if you're worried about the markets, I still think that you should be trading defensively. I'm not trading very aggressively at all right now. My focus is going to be on options and earnings trades for the next couple of weeks. And maybe I'll take a couple directional plays. If I do, you'll see them on my patreon.com page. And I'll let you know what I'm thinking and why I'm looking at taking those trades. But for the most part, I think we still need to be careful here. And we need to wait to see how we set up here. And I think the key right now is going to be this area. 235 on the Dow Jones, as I mentioned earlier. And this 153 to 155 area on the Qs. I think those are the two critical areas we need to see. And we need to see how we navigate and whether we can stay above those areas. If we do, then I think that we could set up for some better plays as we start to sort of consolidate. And again, I think this is going to take place over the course of the next month or so. I don't expect us to come down in 2 days and test 155. I think it's going to be something that takes place over another couple of weeks until we start getting some of these tech names to report during earnings. And then from there, we should get a much clearer picture. But ideally, we can't lose these levels. If we lose 154 on the Q, or we lose this 235, 234 on the Dow Jones, then I think that we're headed much lower. We're headed lower and probably pretty quickly, right? So keep an eye on those areas, and I think those are the critical areas. And then from there, we'll be able to judge what happens from week to week. Other than that, I hope this helps. If you guys enjoyed it, feel free to leave a like or subscribe on the YouTube page. If you're on the Patreon page, feel free to examine some of our older ideas and some of our blog posts. We've had a lot of good stuff throughout the last couple of months. If you just scroll down there, you'll see we've had some pretty good trade ideas, even in the close of the last quarter of 2018 when the market was really tanking. Most of our ideas that actually triggered actually worked pretty well for us. So, feel free to go through there and take a look and see if you like some of those ideas that we had. And other than that, hope you guys have a good rest of today, and we will see each other again in the next video.